Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 12th, 2016. So this week again we saw stocks hitting all-time highs as they worked off some of the bearish divergences. We'll look at technology, discretionary, industrials, and financials that are continuing to lead, while the interest-sensitive sectors such as utilities, real estate, and telecoms may also be ready to bounce higher. At the same time, bonds have not been giving up their gains and also are pushing, well, close to 52-week highs, not all-time highs. The dollar, I think, will push higher, and this will weigh on gold, which is seriously overdue for a pullback. Oil may have found short-term support, also possibly natural gas, and we'll finally look at copper, which may be bottoming out. Alright, this is S&P 500 ETF SPY on a daily time frame. This is showing again all-time highs on Thursday and also all-time closing highs. Now Friday we have an inside day, whereas this entire range is within yesterday's entire range. So I think that next week, with the next next 4 or 5 days, I don't think we'll be making another all-time closing high. This is according to some of the other indicators I follow, but we'll see if my prediction is correct or not. We may make an intraday high, but I don't think we'll make a closing high. Down below here we have advanced decline line, advanced decline volume lines, and I showed this divergence here a couple of weeks ago. We're saying this is a bearish divergence. We have a slightly lower high here, slightly lower high, while the index itself made a higher high. So this obviously got worked off, and now we have a higher high in both indicators, and this just shows that it's kind of, indicators are secondary derivatives of the price itself and the volume, of course, too. So they are a distant second in technical analysis, and price really is the most important determinant of where things are going. So if breadth is not as strong as some other times, and we still making all-time highs, this just means that some smaller number of stocks are pushing higher, but nevertheless in the totality of things we are pushing higher. So again, I will take indicators with a grain of salt, especially the advanced decline, especially the breadth indicators that are kind of like derivatives of the primary indicator. They are somewhat useful, but they are, especially divergences, they are more often than not, they don't work out. Here's another view of S&P 500. This is the actual underlying index on daily time frame, going a little bit further back, about a year back. Also all-time highs, all-time closing highs this week. Here we had similar divergences here. They didn't really work out too much or amount too much. I think the more important ones are percentage of stocks above the 200-day moving average and the bullish percent index. They are firmly in the bullish territory. So if you're trying to determine the trend, I think the trend is quite bullish. And of course, the all-time highs, of course, are also showing that the trend is bullish. And this is one of my proprietary indicators that turned bullish sometime in late May, and from then on I basically considered any of the oversold conditions to be a buying opportunities. This is a S&P 500 on the weekly time frame, pretty clear breakout here. Now so far we have not retested this breakout, and price almost always comes back and retests the breakout. So sometime in the not so distant future, most likely we'll see a retest of this breakout around what is it, 2130. But if we do get a retest, I think it may be a buying opportunity, because I think we'll be going higher. Honestly, I don't see any reason to turn outright bearish at this point of the game. This is QQQ on a daily time frame. Also all-time highs and all-time closing highs just on Friday. So this is showing again a very strong, extremely strong move. Good appetite for risk, because technology stocks are more risky, and this is about 15% move. So I think we're a bit overextended, but by no means weak. So possibly we get a pullback, and of course a pretty logical level would be a pullback to around 111, because we have three things happening around that area. We have two touches and a 50-day moving average. So that will be a good place to look for a support on a pullback. Here's a QQQ, going back a little bit over a year on the daily time frame. I pointed out this RSI indicator. Again, overbought in a bullish security really doesn't mean much, so this is a normal occurrence. In fact, this is a very good sign that we are seeing a bullish occurrence here. So a slight divergence, we have divergences here with short-term breadth indicators. So possibly, well, obviously we are overdue for a pullback. And again, like I said, normally, we do get a retest of a breakout. So there are another levels here to watch here at around 114. So that's another pretty obvious support level, and then next support level around 111, 110. And here are some of the weekly time frames for the several sectors within the S&P 500. This is SPDR XLK technology, all-time highs, all-time closing highs. This is showing very strong appetite for risk, as I just showed with QQQ. Again, overextended, but by no means weak. So we'll look maybe for a pullback to around 44.50. And then the retest, and then possibly continuation higher. Here's XLY, a consumer discretionary, one of the more economically sensitive sectors out there. Also all-time highs, again showing good appetite for risk. This is RGI, equal weight industrials, again all-time highs and all-time closing highs. So this is a very broadly diversified ETF that shows that there's plenty of people interested of buying at these levels. And another one is broadly diversified is RYF. This one made an old 52-week high, but then sold off by the end of the week. So I think when we get to bonds, I think it makes more sense, because bonds have been actually quite resilient. So again, financials may be under pressure because of the movement in bonds. And because bonds have been under pressure, we have some of the economically or other interest rate sensitive sectors. For example, utilities kind of came down a little bit. But they did hit all-time highs, so this is still very much a bullish chart. So again, any pullback, I think, in my opinion, is a buying opportunity. Real estate didn't really pull back as much as utilities, but nevertheless, also pulling back because of this is a more interest rate sensitive, but not extremely interest rate sensitive as bonds themselves are. And finally, here is the telecom. This one really got sold off pretty hard, but then again, these are continuous all-time highs. So this is exactly what I was talking about. Normally, a breakout and then a retest occurs. So we have a retest that is probably going to be around 31.50 or so. And if we come down there and hold, most likely it will be a buying opportunity as well. Okay, so this is TLT on a daily time frame. So bonds didn't really give up that much. These are all-time highs, pulled back a little bit and just kind of consolidating in a sideways manner. Now I think we're going to try for all-time highs again, and we'll see if we break out. But then again, at this point, it's really difficult to say because the correlations that used to be much more consistent now don't correlate as much. For example, bonds used to be consistently negatively correlated with stocks. Nowadays, you can see, stocks and bonds are moving up together. So we'll see where this goes. But I think Janet Yellen really has no appetite to raise interest rates at this point. Maybe one day in the future she will, but at this point of the game, I think, if she does raise the interest rates, it will be probably like, a quarter of a percentage, maybe half a percentage point. So how much will it weigh on the bonds? I guess we'll see. Considering right now that we have negative interest rates in Europe, American bonds really don't look that bad. Anyways, looking just purely at this price action, we have a breakout to all-time highs and possibly a falling flag right now. If we do get a breakout, then it calls for fresh all-time highs. This is AGG on a daily time frame. Also, more diversified bond ETF. It's really similar pattern, and again closing in on all-time highs, very close again. So I wouldn't write off bonds just yet. Bonds are really a good part of the portfolio, and it's good to have them around. This is a weekly time frame. I kept showing this chart, and then we had a breakout with a similar move being duplicated, like after this breakout pattern. After this pattern, we had a breakout and a continuation higher. Right now, we basically are at all-time highs and kind of just moving sideways. Again, if we break out of this possible triangle consolidation, fresh all-time highs are almost surely going to follow. This is TFI, the municipal bond ETF, similar pattern, just kind of continuing higher, and hitting all-time highs again. This correction so far has proven a buying opportunity. We have, my subscribers have positions open, hopefully. I have positions open in all of this ETFs. TLT, AGG, and TFI, and again, they're good to have around because they're really they don't move as much as stocks, but they're nice to have to stabilize the portfolio. Moving on into the Forex universe, this is US dollar index, daily time frame. I think the whole thing is still possibly a bull flag with this big move and really messy chart, but then again, this is Forex, so trends are not as obvious as they are in the stock charts or the stocks or indices. Forex is much more volatile and more unpredictable. As far as the other currency against which dollar is traded, the major three currencies, of course, are Euro, yen, and pound. Maybe I'll add Australian dollar, but these are the three major ones. So I think the dollar will be moving higher next week. At the very least, I don't think we'll make a close and low, below this lows here. On the weekly time frame, we had a breakout here in 2014, and basically we're consolidating in a sideways manner. So it is entirely possible we break out higher and continue higher, and this at least the depth of this pattern is 9%, but it's possible we get even bigger upside, like for example that much, which is about 20% upside. If we break out of here, out of this consolidation. Of course, if that happens, the euro will come under pretty severe pressure, and it's almost a mirror image of the US dollar chart. You know, break down, sideways consolidation, and then it's entirely possible we break down from here. So let me see, what would be the this is about 19%. So that makes perfect sense. So basically, it's the euro that needs to either break down or bounce from here to really influence the dollar index. Here's British pound versus the dollar. These are 30 plus year lows for the British dollar, so it's pretty obviously a bearish chart. Of course, I wouldn't necessarily exclude a short-term bounce, especially on a daily time frame. This is the Japanese yen. I kept pointing out this chart. I think it's possible we're seeing resistance here, and a rather severe one, because we have 1, 2, 3 times so far are unable to penetrate that level at around 99, 100. So I think if we don't, burst out of this level anytime soon, I think we may actually roll over. And as I said before, we can see a reversal in the yen, continuation in the British pound, and continuation in the euro. So if all three of these currencies will be losing ground against dollar, then of course the dollar index will break out above this resistance at 100. Okay, this is a chart I showed before. This is gold on weekly time frame, graphed together with the US dollar. Now normally US dollar and gold have a rather strong negative correlation. Lately it's been somewhat positive, with both gold and the dollar moving up together. If I'm correct about my prediction, I think that dollar will continue higher. This will certainly weigh on gold. Here is gold on a daily time frame, continuous contract. This is possibly a lower high, and we're certainly overdue for a deeper, rather, somewhat of a deeper pullback. Again, if the dollar strengthens, I think that gold will come under pressure. Here is a weekly time frame for gold. I think we may be headed for a retest of this breakout level around 1300. So we had a breakout, one retest, possibly another retest. If we don't hold here, I think we may head all the way down back to $1,200. And this is again provided dollar will strengthen further. Here's gold continuous contract on a weekly time frame going back to 2011. So down below here I have what's called gold breadth index. It's one of my proprietary indicators, and the way I read it is when this indicator hits goes below this red line, I'm basically considering gold to be in a bear market, and I'm waiting for it to hit the green line, which it did just this year. And I think now gold, and by extension gold miners, are in a bull market. But notice that gold had a lot of breakout attempts and only the final one succeeded. So this new bull market in gold, I think, is still quite young, so there's plenty of upside opportunity. But again, gold is really a I don't know how to put it, difficult commodity to pin down. Some people say it's a store of value, some say it's alternative currency, some say it's a commodity. So there's a lot of things that gold means to different people, and by extension there's a lot of forces that are driving gold prices. Gold versus the dollar is just one of them. It is a very strong one, though, in my opinion. So, if we get continuation in the dollar higher, gold will certainly come under pressure. Here's GDX, Gold Miners ETF. Extremely strong move. This is all-time lows at 1240, and it almost tripled so far. It's $32. So I think it's extremely overextended. One of the indicators I like a lot is this bullish percent index. It hit 100% here in July, and now it's slightly pulling back. So looks like we have a bearish divergence where the indicator is making lower lows while the index itself is making higher lows. So this is showing lesser and less participation. We'll see if this actually translates into lower prices for the gold miners though. I think again, if the dollar strengthens, gold and by extension gold miners will follow. This just shows a weekly time frame of GDX and the same indicator down below. I just wanted to show it for illustrative purposes that we had multiple breakout attempts and only the final one succeeded in gold miners. All right, moving on to true commodities. This is West Texas Intermediate, light crude oil, continuous contract on a weekly time frame. So I think this is still a bear market, but it is possible that we are going to be making a higher low. So we have a lower low, potentially higher high, and potentially a higher low. If we hold, this support, because it bounced really in exactly the support level, so this is a almost too perfect. I think this is a bearish security. I think there's a glut of oil, so there's really no good reason why it should continue higher. I think maybe we'll see another rejection here around $50 and then continuation, another leg lower. This is USO. It just shows for illustration that we had a possibly like a wedge breakdown out of the wedge formation. I wouldn't really necessarily analyze USO as much as West Texas Intermediate actual chart because of the slippage in the prices. Next is natural gas. I think this is a bullish chart. This is a daily time frame. I think this is a bullish chart. We had a breakout here around $2.50. Continuation to 52-week high, and looks like we're now in a retest mode of this breakout. This Friday was a bullish engulfing, possible bullish engulfing. If we get a continuation higher on Monday or Tuesday, this will be a confirmed bullish engulfing. So I think this is a bullish chart, so I'm looking only at the bullish opportunities in natural gas. Here's natural gas on a weekly time frame. This one is a little more obvious. You can see there was it looks like we're attempting retesting a breakout. I'm going to extend this support zone. So it looks like we're attempting a breakout retest here, and if it holds here, it makes perfect sense for it to bounce here because there was a lot of things happening in the $2.50 area. If it holds here, it will be just a perfect opportunity for it to go higher. Alternative scenario, of course, is we break down and then just unravel out of this bull market. This is UNG, the tradable vehicle for the retail investor and the for the United States natural gas market. It doesn't follow, I mean it follows the natural gas market pretty well, but it doesn't. The chart looks somewhat different because of the slippage. Because of this are actually all-time lows, and these are clearly not all-time lows. So again, I would analyze the actual natural gas chart more than I would analyze the UNG chart. And finally, I want to show copper, this continuous contract on a weekly time frame. These are multi-year lows here, so possibly we are attempting to go higher, but so far we're not able to do that, and we're making lower highs. So far we were able to make a higher low once. If it holds here and we rally, maybe we get a a breakout above these three peaks around $2, 30 cents or so. If we do get a breakout around there, then it's possible we have a new bull market. But so far, I have not seen enough evidence to say that yes, indeed, we are in a new bull market for copper, and this pretty much would be peak and bottoms in copper. All right, if you like what you're hearing, please consider signing up for my trading services. Please stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.